Hey everybody, Rob Booker here. The sponsored video comes to you from IGUS. IGUS is a leading Forex broker. I'm not a pro, I'm not a professional. All trading involves a substantial risk of loss. Past performance is no indicator of future success. And listen, all this is educational and informational. It's not a solicitation to buy or sell any financial instrument. Let's get down to it. One of the most exciting things going on right now, my friends, is the bigger picture is changing. This bull market, this gargantuan multi-decade, not multi-decade, but multi-year, decade-long plus bull market is probably over pretty soon. Remember, I don't know what I'm talking about, but listen to me. The risk to the downside with an election coming up is much more significant than a risk to the upside. I'm going to say a lot of things on this video that could bother you, that you might not like, that may not be appreciated, but I'm going to tell you something. There are some major changes that are about to happen in the market. Some significant winding ups that have occurred. So we're going to look at long-term charts here. Forget for a minute, just forget about short-term day trading garbage. I'm talking about looking at the next 10 years. Crazy, right? This is 2010 right here on the far left of the chart. This is 2020 on the far right. Next 10 years will be brought to you by, I don't know, bullish or bearish. So the bull market from, 2010, 2011, whatever, the bottom of that bull market coincided with the run-up in the US dollar and a declining in the Japanese yen. That's a risk-on trade. Why does that happen? Demand for US assets increases. Then there was a sort of a manufacturing industrial production scare in China and the US even, and that kind of sent the markets lower years ago. And then the bull market has just raged onward since the 2016 election. The election of Donald Trump in the United States of America precipitated a rise in the US dollar. And it also precipitated this sort of like decline afterwards, even though asset prices have inclined, the dollar has declined. And what this shows me is there is a significant risk. Significant risk. There's a divergence going on here. The dollar is down. Dollar yen is down. You would expect the dollar yen to go down in a bear market. You would expect that. We've talked about this before. The carry trade ends. People pay back their low interest Japanese yen loans. And there's a declining interest in getting US dollars because they don't want those assets. So there's a major long-term level of support at 100. Now, you forget about this. It's easy to forget these kinds of things. But you don't have to go back that far to see, the dollar yen at like 75. It's pretty crazy. So I just want to put that out there. 2011, the yen was at 75. There is no reason why, over the course of the next decade, we can't go to that level or lower. There's no reason. There's absolutely no reason that can't happen. There's also a bullish case to be made. Now, if you want to look at the correlation between the asset prices, the financial markets, and currencies, which you want to look at is the Australian dollar, Japanese yen. There it is. It's the most highly correlated currency pair to the financial markets. Now, there's something absolutely going wrong here. In a bull market, you should see the Australian dollar, Japanese yen much higher. 2010, right here. We swing upward as the bottom of the market hits, and then there's this weird manufacturing industrial production scare in 2015 and whatnot. And then what? The Australian dollar declines on declining interest in Australian assets? and this possible V shape, this inverted empire state building formation. So here's the counter argument to everything I just said about a market crash and a decline in the US dollar Japanese yen. If it breaks 100, goodbye, 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 dollar yen, 2,500 pip move. So the same thing is true here between 75 and 80. So let's just call it 77.50. 77.50 on the Australian dollar Japanese yen. If that level breaks, then the asset bubble, and it is a bubble if you compare present earnings and expected year earnings to asset prices. That's preposterous. As a side note, Zoom, the webinar company, and we use Zoom, has a price to earnings ratio of a PE ratio of 1,505. Now either Zeus has to come back on a giant bolt of lightning and explain to us, defy the laws of gravity. Isaac Newton needs to return from the grave together with Albert Einstein and rectify the differences between quantum and classical physics. Or something, the asset bubble has to collapse. But if it doesn't, the asset bubble continues. If the Australian dollar Japanese yen breaks 77.50, that puts 90 in play. And if that breaks, that puts 105 in play over the next 10 years. And you think, over 10 years, I'm not going to be in a trade 10 years. My friend Max once bought the US dollar Canadian dollar at $1.10, said I'm going to hold on to it until $1.20. He was in that trade for like 7 months. He got 950 pips, and it turned back and went against him, and then he went to break even on that trade. That's how disciplined he was. Then he bought it again, and it got to $1.20. That's discipline. That's long-term trading. There ought to be something in your portfolio that you hang on to for longer than 5 minutes. Anyway, the asset bubble could continue forever. Dow could go to 50,000 or something like that. And that's the argument for it. Watch the Australian dollar Japanese yen. That's the thing that will tell us what the other thing that's going to happen is. These Japanese yen pairs that have gotten just crushed lately, I mean, over the last 4 years, 3 years in particular, they just got worked. They got annihilated. You know, if things turn badly, the Australian dollar Japanese yen along with the dollar yen could fall below 60, and then I don't know what happens to it. I don't know how much farther that's a crazy number. That's a crazy number. But it does look like there's a little bit of a recovery in the Australian dollar Japanese yen. If it breaks 77.50, that puts 90 in play over the next 2 to 3 to 4 years. And I think it hinges a lot on the upcoming election polls. So watch the polls in the United States. You always buy the rumor and sell the fact. So watch the polls for a reaction. Generally speaking, this is not a political statement. I'm not going to tell you who I'm going to vote for. If Biden is leading in the polls, if Biden or Kanye West is leading in the polls, then the stock market will drop and, you know, the yen will strengthen. And if Donald Trump is leading in the polls, or by a significant margin, it has to be a significant margin, asset prices will go up and the yen should decline. That is not a political statement. I defy you to get me to reveal my political leanings. I will not do it, and it doesn't have any place here. It's irrelevant to this conversation. You have to be completely politically agnostic when it comes to this kind of stuff. All right, that's the big 10-year play here. That's the long-term charts. Thanks to IGUS, a leading Forex broker, for sponsoring this video. I'm Rob Booker. Take care, everybody. I'll see you next time.